At the start of the year, the average effective tariff that the U.S. was paying was 2%. And at one point, just until this weekend, it was at that over 25%. So now with this pausing, we're down to 10%. So we're still going from 2 to 10, which is
Yep.
still, fivefold increase. So that's still significant. But certainly, again, we're not at those, eye-watering levels of 145%. So we will, again, thank goodness for small mercies.
So what do you suggest here for the U.S. economy here? Is there a recession? Has that been taken off the table here to the extent it was even on the table for you?
So it was never officially on the table, although at one point, I'm sure, I think I said it was like a 50-50 coin toss at one point. But I think it's been further removed away from the table. Still on the coffee table, perhaps. But again, we're going to have to see how this plays out. I mean, it's a 90-day pause. It's a good thing that both parties came away from their corners or moved away from the corners and started talking. And that was definitely the biggest step. And the fact that we've lowered it down to like 30% and 10% is certainly good news. And if we can stay that way, that is a good thing. But there's still a lot of unanswered questions out there about how this is all going to play out. But definitely we have not. This certainly puts a recession, off the table.
Jennifer Lee with us, the BMO Capital Markets, and we continue with here the Dow up 1,000, now up 967, up 2.7%. Let me get over here. I can do this on the Bloomberg. Paul taught me how to do this to get a quote on Apple Computer. 208 up $10.
There you go.
I mean, it's pretty. It was 212ish, I think, earlier, so a little bit off the enthusiasm that we saw 2 hours ago.
Jennifer, how about the inflation outlook out there? How are you kind of thinking about that these days?
This has certainly helped. Again, this has helped cool the, a lot of the price pressures. So, but we still see inflation rising, but just not obviously as much as we had anticipated earlier. So we'll see how, again, all this plays out, whether or not, we are going to be coming to an agreement at 30% and 10% by the end of this 90 days. But we're also seeing a lot of, even before today, we're already seeing a lot of front loading when everybody was getting out there, get your stuff now while you can, while you're able to, while the prices are still low. So we're probably going to see more front loading in case the 90 days does not result in a firm, a deal, in case something falls apart again. One never knows. So we're probably going to see some more front loading. But again, I think it's still going to put a lot less pressure on inflation. And I'm not sure what it's going to do for the Fed either. A little less pressure for the Fed as well.
Well, wait a couple of days on the Fed call as well. I think that would make a lot of sense. Jennifer Lee, I think 90 days gets us out. Paul, help me with the math. 5 + 3 is August.
Yep.
So we're popping into September, sort of the end of Q3 when we get a redo of whatever Trump angst we're going to get. And with that, Jennifer Lee, is the GDP call for the end of the year. So if we pull away from recession, is it a subpar under 2% GDP call, or can we do better?
We had growth picking up towards the end of the year, assuming we had assumed that things were going to be settling down a bit. The Fed would be stepping in and saving the day a little bit. So we still anticipate a pickup, of course. Whether or not it's going to be subpar, again, I think it's like way too early to say.